Hello, everybody. Thanks for joining another one of our Mat Leader discussions. I'm Will from IMP Software. We work with a range of trusts working on budgeting, forecasting and financial reporting. And we often get asked around how MATs are doing things, whether that's how they do the top slice, how they do budget management, or how's the team set up. There isn't a simple answer to any of those questions. What we wanted to do with this series was really just shine a light on how trusts are operating within their context, dependent on their journey. And so just speaking to a range of trusts across the country. And so today we are joined very kindly by Paul Wilson from Saffron Academy Trust. So just to start, Paul, firstly, thanks all for joining us. And secondly, how did you end up as Director of Finance and Resources at Saffron Academy Trust?
Good morning, Will. Thanks for inviting me to participate. That's a really good question, actually. I actually spent most of my early career working in financial services in the city in Canary Wharf, and then I was RIFT in 2011. At the time, I was a governor at my local secondary school, which actually was a school I attended as a student. And that school had just become an academy. The bursar was off with stress, so I helped fill in some resource and skill gaps and ended up working there for 2 years as the finance director. And I really enjoyed my 3-minute commute to work, which was a bit novel after working in the city. During that time, I actually implemented PSF, and that was probably the first time that you and I crossed paths. So that was back in 2011. But after 2 years, I decided that Max looked a little more fun. The Saffron Academy Trust were looking for a finance director for their 2 secondary schools. I applied for the role and joined them in 2013, in August of that year.
That's a 3-minute commute. I mean, that's quite long in current commuting times. Depending how long your stairs are, I suppose. 3 minutes.
I was gonna say it's 30 seconds now.
Yeah. So just on that, so a career in financial services in the city and Canary Wharf, what was that transition like from that environment to education?
I always, actually, funny you should say that. I think the pressures are the same. You still end up dealing with regulators, and if I'm really blunt, apart from travel, which I don't miss, I used to have to drive into Canary Wharf. I miss being able to get a decent coffee at 6:30 in the morning. I miss access to really decent sushi. Okay, there's the money, but the rewards come in in different ways. And in education, I actually feel as if you're creating and contributing, as opposed to you being a social pariah for working in investment banking.
Yeah, no, I get that. How long did it take you, do you think, to fully transition personally, just in your mind, from I'm kind of in this now and I'm part of this?
Probably the 2 years at Leaventhorpe. I mean, I was a governor there for about 10 years, and I got quite upset looking at financial data that was poorly presented, schedules not reconciling to each other. And you do get a sense of frustration. So the transition for me was actually be able to contribute to that process. And I obviously did a reasonably good job, because I was giving my time for nothing, because I've been riffed from my job in the city. I was giving my time for nothing, and the head teacher at the school down the road said, "Actually, Paul, can we pay you to do this for a while you look for another job?" And I went, "Yeah, sure, no problem." And then I just gave up looking, if I'm brutally honest. There's a bit more to life than spending 14, 15 hours a day going into the city.
No, I can get that. And that was 11, nearly 10 years ago. So now Saffron Academy Trust. Could you introduce Saffron Academy Trust in terms of what the trust looks like, what it looked like when you joined, and then that kind of journey that since you've been there?
Yeah, for sure. So in 2013, the trust consisted of 2 secondary schools. Each of those was using FMS. Fortunately, they were both using the same chart of accounts, but different cost centres, and there was really no ability to consolidate. So one of my first jobs was I had to design an Excel-based reporting and consolidation tool, and some aspects of that we're still using today, by the way. So moving on from that, the trust board really wanted to expand the trust. So yeah, I insisted on a change of accounting system, and so I turned to PSF. Our expansion journey has been probably slow and steady, with 2 primaries joining in December 2014, another couple in 2017, and then in the last 18 months, we've had 2 secondaries and a primary school join. So we now have 9 schools, a teaching school hub, a central services team, all located in Northwest Essex. And I can envisage that we will continue to grow at a steady pace, maybe to about 15 schools in total, sort of large enough to effectively leverage the economies of scale properly, but small enough to effectively control within a modest geographical footprint. Very much the ethos of Saffron Academy Trust is, you've got to get must keep the ability to get your arms around all the schools in the trust.
What does the team look like? So the finance team structure look like where you are now, and how has that evolved? Because obviously that's been that steady period of growth, and has that been helpful for team structure and team design?
I'm really glad you asked that question. Actually, it's an area of great interest for me. So one of the real benefits of steady and measured expansion that we have at Saffron is the opportunity to absorb new talent. We can reassign roles and responsibilities and evolve the central services team structure to improve our resilience. That said, finance is a great place to start because by necessity, it's usually the very first centralised activity. So in Saffron's case, we started with 2 secondary schools, as I mentioned, each running its own finance team in what we call a hub model. We defined a hub, by the way, as that location from which purchase orders are sent to suppliers, invoices are received, and payments are made. This was a very deliberate strategy, which we anticipated that when primary schools joined the trust, the finance activity transferred to their hub secondary school, along with any staff needed to resource that additional workload. This worked pretty well. We've got 2 hubs, one in Saffron Walden and one in Braintree, each operating through a secondary school. Within each hub, the tasks each team member performs are aligned more by function than location. So for example, if your job is to raise back payments, then you will do that across all schools in your hub. However, that original model was sort of predicated on feeder schools joining Saffron, and more recently, we had 2 secondaries join. So our solution was to treat those secondary schools as super primaries, and again, base their accounting activity within the existing hubs. So now we have a hybrid hub model. But let me round this up by talking about staffing. So for colleagues working in finance on procurement and supplier payments, those roles are physically located at either of the 2 hub schools. This gives access to payment signatories and a storage point for physical invoices, obviously. In addition, we have colleagues responsible for the remaining major activities of business, i.e. reporting, financial control, prepayments, accruals, payroll and payroll control. Those colleagues can, and in fact do, all work in different buildings. What makes this possible are some good clouded systems. So Saffron's accounting system is clouded, as are all the finance working files using SharePoint, and of course budgeting and forecasting are clouded via IMP.
Okay, so hub model, and it's interesting because I've seen various hub models, and hub model, again, it's got one word, one name, but the reality is that can look really, really different. In terms of the responsibility, is your relationship as FD, finance director, with the hub leads, and then they have the relationship with the schools for budget accountability, or what kind of sits where, and at what point do you interact with, and are the schools accountable to you, or does that go a part of that kind of governance arrangement? What,
from a central services point of view?
Yeah.
Okay, so I'll talk about both sides. So the CEO, obviously, we've got an executive CEO, and she has reporting lines up from the head teachers of all of those schools.
Yeah.
And from a central services point of view, we provide a service not only to the trust, but also to each of those schools. Now, because of the way that the trust has grown, we do have individuals in each of the schools. But so in one school we've got a qualified accountant, and her role is completely and utterly to do with controlling payroll. And not only the making sure that employees are paid, but also all the balance sheet control, making sure HMRC are paid, and your reconciliations into the finance accounts as well. So the interface with each school is effectively done at a hub basis, where my finance controller sits in one hub, I sit in the other, and you have this pool of schools. Where the Saffron hub is concerned, we've just one of the secondary schools, there was a qualified accountant, and her title now is head of business reporting. So her job is to make sure that every single LGB, every single trust meeting, if there's a finance report to be done, then it's her job to make sure that those reports are written and delivered in time. So it is very much a centralised service, irrelevant of where geographically you sit within it.
Right, so that hub is very much for service delivery purposes. There's no accountability, there's no governance that sits at hub level. It's just purely that rather than one central services team, that's divvied up into the hubs to take on their component schools.
And that's because actually we as a MAP, we are relatively small. We're not tiny, but 9 schools and a teaching school hub, you can still do that. I imagine if you're talking 20, 30 schools, then you might want to, you're getting out of your very small geographical footprint, and you may want to regionalize, is how I would explain it, your responsibilities a bit more.
It's interesting how that's balanced up as trusts grow, because there's always an aggregation of something, and that aggregation could be that there's a hub delivering services to a number of schools, or there's fully centralized processing, but then there's a hub business manager or finance lead. So there's always an aggregation point, and actually it's just interesting how some aggregate all of the transactional and then almost then have hub-based responsibility, so a finance lead for a group of schools, or the other way around. And that's that's part of the interesting thing about MAPs. They all do different things, and growth is often the way trusts have got to their current number of schools, and because you started with 2 secondaries, that is an obvious way for why you end up where you are. So most trusts where they are is a combination of design and also history and context, and it's not often fully one or the other. But that's
I think one of the main drivers was the fact that we needed, because we anticipated that it'll be primary schools that join the, if you like, the feeder schools to the secondaries would join. They would be in very close proximity, and therefore we wanted one central point where all the invoices are stored. So, the physical delivery of those invoices will be a lot simpler.
Yeah, and that, I guess, in terms of your model, then you have gone down that almost secondary and feeder schools, so it's very much taking local education from reception through to year 11 or 13.
That's why that's why 2 secondaries coming on board recently was quite a shock. We had to radically rethink our model.
Yeah, but I'm sure it'll put you in good stead, because it changes all the time. The requirements change, people change. But it's interesting that there's often an assumption as well that MAP, centralized finance functions or hubs or teams or whatever, is filled with accountants. Let's just fill it with accountants and get rid of people at schools. And we don't see that. I mean, how much of that central finance team is pulled from staff within the schools that were joining the trust versus externally pulled finance professionals?
Up till recently, up to September just last year, there are only 2 qualified accountants within the trust. Now we have 4, and that's because one of the schools we had 5. My apologies. So that's because the schools that have just joined each had an accountant. In fact, one had two, at various positions. So we are. We took a deliberate step to look at our infrastructure and change it to take account of that skill base. And so, for instance, we've got one accountant. We've got the Saffron hub is larger than the Braintree hub, for instance. We've got more schools, and we decided that we were going to split the secondary school reporting and the primary school reporting. And so we've got the business reporting manager is looking after the two secondary schools, and the other qualified accountant who happens to work in the same building as the business reporting manager. She takes the two primary schools.
Right, I was going to jump on to reporting, because I know in the earlier part you mentioned around your Excel reporting model, and I'm still in awe of your Excel reporting model, Paul. I remember when we first started talking again in the last couple of years, seeing your Excel model. So what does financial reporting look like at Saffron today? How's that changed, and how do you, I mean, it's always progressing and moving, I imagine, but can you just cover that piece?
Yeah, sure. Okay, so the financial reporting, it changes in granularity depending upon the audience. So you get more detail, for single schools at the local governing body level, and then you get less granularity, but more schools at the trust board level, obviously. That said, each report that goes out, it goes out with a commentary, including an exec summary. We use standard templates that drop out of that MI reporting spreadsheet that cover all the usual reporting groups. So there'll be income, staff costs, administration, premises, curriculum, etc. We make a further differentiation between what we call principal activity, that being the provision of education together with catering, and non-principal activities such as trips and capital related expense. So we separate out the non-principal because there are very large movements from month to month, which, especially in something like trips, which just create a lot of financial noise that actually hamper LGBs and trust financial meetings from focusing on the education piece. So so whilst all the activities explained, we've just compartmentalized it to make it a little bit more digestible.
Yeah.
In terms of presentation, we issue data for the current month. We do year-to-date totals for both the current and prior years, and then the annual budget compared to our forecast projection of how we think the year will end. So, having said that, I often get a couple of questions that I normally get challenged on. So, firstly, what about a budget year to date? And I have to say that I'm not a great believer in year-to-date budgets, because they largely rely on the ability of finance to predict when a cost will occur. And this tends to reduce any commentary to discussion about timing differences, especially on capitation costs. In short, I don't really care when budget holders spend, as long as they don't overspend.
Yeah.
That said, to control spend, we have Budget in Force activated in their accounting system. Cost centre holders are empowered only to commit their budgets. They're not authorised to order from suppliers, because that is the sole prerogative of finance. So Budget in Force means that budget holders cannot even raise a purchase request if they don't have sufficient budget to cover the cost, which means that cost centres should not go over budget unless the budget holder has spoken to finance and agreed it. The second question I get is, how accurately can you forecast to the year end? And for us, a forecast has two component parts: the year-to-date actual and the amount we anticipate that we're going to spend going forward, i.e. the outturn. Income is mostly GAG, and that's well known, where we reforecast the staff costs each month, having taken financial account of joiners, leavers, FTE changes and promotions, etc. And all other costs we assume to be in line with budget until we know otherwise. So we place huge reliance on our budget in force policy, but events like COVID, etc., will always require us to reevaluate the instance of income costs, reduction within catering, together with furlough, exam fees. These are all recent examples.
Yeah. Yeah, it was interesting. You've got year to date versus prior year to date. And
Yeah,
through all these discussions, there are many people that have mentioned that. I really like prior year because it's factual.
yeah,
Budgets and forecasts, there's always scope for interpretation on that. Year to actual in prior year is factual, and it's got its limitations because it was last year, and
yeah.
last year in February the 19th was looking very different to this year in
Yes.
February 19th. But that, I like that factual comparison as another reference point for review. How do you see that being used when you present it to trustees? Is the focus on, I guess the primary focus is on outturn versus budget, but what types of things are flagged up on previous year to date versus current year to date?
You don't tend to get a lot of challenge. Weirdly, when you get a new school join, of course, their year to date is zero,
Yeah.
which always looks a bit perverse. We don't get a lot of challenge unless there are huge variances, in which case our commentary will cover those. I'm struggling to think of of an example actually.
Run rates on like agency or overtime and things like that. I guess those are examples that I'd see a prior year comparison being useful.
Yeah, yeah. To be honest, we don't end up doing a huge amount. I'll be honest with you, we don't end up doing a huge amount of commentary on it. It is there.
Yeah.
It is there because I don't want to do have a timing difference discussion on a budget. So therefore, we're using the prior year to do some comparison. And if it's a huge variance, then possibly we will we'll start doing a commentary about it. So, for instance, the first year that the teachers' pay top up and pension top up came in will be a good example of when exactly where we would have to do a bit of commentary, because it obviously didn't happen in the previous year.
Yeah. And what does that reporting cycle look like throughout the year? So starting from September, what does reporting and budgeting and forecasting look like through to
All right. So for the first, obviously we have to produce a set of accounts for every single month. I'll make an exception for that. We do not do September. We are too busy closing down the year end, obviously. After that, we start producing sets of accounts. We will retrospectively do September, but our activity on reporting is relatively sparse for the first couple of months. It's far more important that we that from a trust point of view that we get the year end and the audit past muster. So we will start reporting normal trends and actuals against the previous year up until probably November. Around about December, we start to forecast staff costs. If there are any in that first 3 or 4 months, if there are any large differences, say in income to budget, we'll start reporting that. So a good case in point will be catering. Right here, right now, we budgeted for a scenario, and no students in school has meant that catering income, for instance, has tanked quite significantly.
Yep.
But again, so the cost. So we will start reporting those large known variances, and then from January onwards, we then start forecasting out not only staff costs, but any other large differences that we anticipate, because we're now looking out to the year end. So we're making our best educated forecast guess, if you like, where we're going to be at the end of the year. And so we start really diving in, looking at all the financial data coming in, and trying to forecast where we're going to be at the end of the year.
And on that can be daunting, monthly forecasting. How much do you see, once you get into the cycle of doing that monthly, how much effort is put into each month to make sure it's perfect? Or is there an understanding that it's our best estimate today based on the information, and next month it'll be better, and next month it is better again? What does that kind of... I've seen some accountants really worry about producing anything that they're not certain on, or really getting uptight around small things because, well, I don't know that. And certainly this year, there's loads of lines that no one really knows. What's your feel on how important lines are and the level of effort to work out what you can for the forecast piece?
For me, you've got your large income line is GAG. Okay, that's almost guaranteed. The biggest cost you have is staff costs. So providing if you're 80-85% of your cost base. So if you've got a good handle on those, then the periphery items can, I think you've got a little bit of leeway, and there's only so much effort you can put into those. So good practices are making sure your prepayments and accruals are done each single month, which we do. The budget in force really assists you, and then the combination of those two, I think we produce a reasonable forecast going out to the year end, and which then flows into our cash flow forecasts, which we do on a monthly basis as well. I think that's sufficient, to be honest with you. And if you think about it, the further you get along the year, the more accurate that forecast becomes. And we take great pains at every single LGB or at a trust resources committee meeting to say, this is our best estimate of where we're going to be at the year end. And I get that. And we've got a bit of a reasonable track record of making reasonable forecasting decisions. They're not completely and utterly accurate. No one's got a financial crystal ball, but there's that. We often get accused of being a little bit too risk averse. Most accountants are. But we try and have some on a monthly basis and some good discussions with each teacher before their accounts go out, and we take their feedback on board, and so we think our forecasts are reasonably accurate.
Yeah, I think prudent is the word rather than risk averse. See that you put more emphasis or any extra process around the March forecast, so the actuals to March forecast from April, as that's the data set you base your BFRO on. And they're going to compare that to your stat accounts. We do. So you have 2 points in the year where you really do go to town, and try and screw everything down. You're absolutely right. So the end of March and the end of August. So March becomes a bit of a year end accounting dry run, if you like, and you squeeze every little pip that you can, just to make sure it's. So you say the focus on the March one is more on the accounting month end, because the forecasting process looks similar each month, but would you say there's more review focus on the accounting data at that particular one? If
you've got the, as you just explained, you've got the big numbers done. So your GAG and your staff costs, and so when you're using a budgeting tool that can accurately forecast where your staff costs are going to be, that makes life significantly easier. You can have a look at your income, and you can obviously report where we've got income variances, and they're normally quite easy to track income variances outside of GAG. And apart from that, I can't. I think there's a point at which the increased effort required, there's a diminishing return, if you like, on the output.
No, absolutely. And you mentioned in part of that around cash flow, and I know you've given me loads of grief around cash flow and cash flow. I've been in the sector nearly as well, similar time to you. Cash flow's always been an area that trusts have been aware that they need to do it because of the financial handbook requirement. I've used and worked with proper cash flow forecasting systems that have a whole load of requirements on every single thing in the budget to say this is quarterly in arrears and advance, it's vatable, this is the payroll profile and when payments are made. What do you currently do in terms of cash flow forecasting, and where would you like to get that to? Bearing in mind that we'd like to help you with that as well.
Okay. So the key is accurate forecasting of your year-end position. So your if you like your outturn, and making sure that is as accurate as you can make it. So if you I then just take, effectively it's a balance sheet really, where you've got say 4 months of actuals at the end of December. That's fact. So your bank balances are factually correct, and then you've got this forecast going out. And so providing that you've adjusted for any shortfall or increase in income, and you've put in overrides for where you think your catering might be, for instance, that's pretty easy. You then got a big assumption on the fact that you think that your creditors at both ends of the year will be broadly the same. Okay.
Yeah.
And then, which is normally the case, I would suggest. And then you've got big lumps coming through into your cash flow as regards things like SCA, etc. So when capital donations come in or SCA come in, we're assuming our cash flow that we're going to spend those to the full, and you then, the only other thing you've got to worry about is whether or not you've got any income and expenditure dropouts into capital. So if you've got some large projects, etc., then you just make an adjustment for those at the end of the year. So you can reasonably forecast where your cash position is going to be at the end of the year, and you can do that on a monthly basis because you've got your expense or your P&L forecast, if you like, running out to the end of the year, so you can see whether or not in a particular month whether you might go overdrawn in your main bank accounts. You might have to move cash reserves around.
Yeah, so, and I think that's where a number of trusts are getting to is a forecasted balance sheet. So it's not a cash flow forecast in terms of a daily bank balance or anything like that. It's his balance sheet today, his P&L projection down the end of the year, and then an adjustment process to encounter any non-cash or any balance sheet movement. And that feels like, it's not a daily cash flow. If you've got cash flow problems, that is not the solution for you.
No.
But if you're, the cash indicators are fine, that balance sheet projection feels to be a good place to arrive at. What type of adjustments do you do just to, on that, if you do, so right, I'm rolling forward P&L forecast plus my balance sheet puts us there, what types of things are adjusted for?
The most difficult thing, we don't have it anymore, was SIF funding, because you've got these weird accounting rules where you have to account for all the income in the year that you get it, but you then account for the cost as it flows through your P&L. So you have to account for the income in your balance sheet, even if you haven't received the cash. You've got an agreement to receive cash, and so you have to record it. And you have to continually make these adjustments within your cash flow or if you're using a balance sheet method to project your cash flow, you have to continually make those adjustments. And of course, you've got the you mentioned the non-cash impactful entries. So pension, the LGPS. You know you're never going to pay that. So it may be in your creditors, but we just take you just make an adjustment for that as well. I forgot that one earlier.
Yeah, and I think that's the value, the capital, because capital, if we've seen anybody get into a sticky cash position, it's always been through capital, something around a capital program, because there's lumpy bits of income and expenditure.
Yep.
And understanding the profile of that is absolutely crucial, because it can really trip you up. So that exercise, make sure you're aware of that capital program and actually where the lumpy bits of cash are as well.
It's a little bit more interesting than that, Will, because you've got a cash flow impact on your VAT as well.
Mm-hmm.
Okay,
yep.
so for instance, we just about to put a 3G pitch onto one of our schools, and it's funded by the Football Foundation and a local football club. So the school in question is not paying for any of this, apart from having to put in, I think, 4 electrical vehicle charging points. Apart from that, but it's a £1 million project, and you're having to cash fund the VAT. So you pay the invoice and you claim the VAT back. And 10 gets you one, that HMRC will turn around and see a spike in your VAT returns and want to know the ins and outs, and they'll freeze your payments for 2 months while you explain what's going on.
Yeah, no, that's important. No, that it gets quiet as well. All right, well, I think that's been great, Paul. And I've focused quite heavily on reporting, because I know that's something you're all over, just because of how much grief you give us on reporting. And hopefully we've contributed to that reporting piece at some point as well. But you really appreciate you taking the time out of your day, Paul, to just go through that journey in Saffron. I think there's been some really helpful bits to come out of there for people listening. Are you on any social media channels, or if anybody said, yeah, I really want to get in touch with Paul to get a copy of his spreadsheet or whatever that might be? Or email address, or?
No, by all means. So email address is paulwilson@saffron.academy.
Yeah.
And obviously we've got the Saffron Academy Trust website, which has got all the contact details as well. So if anyone does want to reach out, then please do.
Brilliant. Well, thanks again for giving up the time, Paul. It's Friday today, so I hope you get to enjoy a nice, peaceful lockdown weekend. And thanks everybody else for watching.
No, thank you, Will. Really appreciate the invite. Keep up the good work.
Thanks a lot.
Cheers. Thank you. Bye.